Welcome back to our GSMI 会计传奇直播室. In English, we call GSMI the Legend of Accounting, FP Life. So today we are going to share about the employment income, some about the director fee or director salary, because sometimes our client not sure whether they should declare dividend fee or just take the monthly director salary. So today Mr. Hao will share to us how to decide which kind of director fee or director salary to declare in your account or in your penerbangan. So let's welcome Mr. Hao. Mr. Hao.
Hello. Good night to everybody. To those who just first time to attend our online sharing, I just to inform you that tonight, in fact, it is the 39th sharing already. For the past 2.5 months, we have sharing about 38 sharings on various type of topics, on this economic package, on all those wages like VSP program and so on, and also obviously had a lot of things dealing with the accounting treatment. How are you going to make your accounting, make your accounts properly so that to save some tax? For the past few 2 months, we also share a lot of this funding. Bankers, we also ask some bankers to share with us, but unfortunately, most of them are conducted in Mandarin. So tonight, we start to conduct in English, all right? So tonight, I would like to emphasize on those topics that quite interested a lot of people. That means the employment income. Louis cannot work out. So this tonight we are going to share a few items on a few things on the employment incomes, right? These are the highlights. But because of the half an hour, I will emphasize on what type of income have to declare, who have to pay income tax in Malaysia, and when do we need to submit our income tax form, and what are the consequences if you late filing or no submission or late payment. And we will follow by some of those the benefit in kind, so-called BIK, the benefit in kind, how to calculate the benefit in kind, and follow by when to declare director salary or director fees. What are the consequences of declare director fees? All right, so we will start with these. First thing, who needs to pay income tax in Malaysia? Basically, under the Section 3 Income Tax Act, everyone who derive income from Malaysia or receive income from Malaysia, or you see the statement itself, Section 3, we read the things, subject to and in accordance with this act, a tax to be known as income tax shall be charged for each year of assessment upon the income of any person accruing in or derived from Malaysia or received in Malaysia from outside Malaysia. We left behind about received in Malaysia from outside Malaysia first. We emphasize on any person who accruing in or derive income from Malaysia. That means it's including all the foreigners who receive or derive income from Malaysia. They have to declare tax also, like some Australian or Singaporean, they have some property invested in Malaysia and they receive some rental income. They have to declare the income from, they derive the income from Malaysia and they have to declare income subject to tax in Malaysia too. Okay, we emphasize on receive in Malaysia from outside Malaysia. This statement will make a lot of people may be confused. All right. Before YA 2004, anything you derive outside Malaysia and you remittance back to Malaysia or you receive in Malaysia will be subject to income tax also. But anyway, effective year assessment 2004, there is an exemption order under paragraph 28, schedule 6, we say that income of any person other than resident company, if you receive by resident income from outside of Malaysia is exempted under this paragraph. To sum up, that means after YA 2004, that means it's about 16 years ago, any income received in Malaysia from outside of Malaysia income is not subject to Malaysia income tax, right? For example, you work in Singapore or you have some rental income in Australia. Those income that you remitted back to Malaysia is not subject to Malaysia under the paragraph 28 schedule 6. It was effected after year assessment 2004. So I hope this will make things clear. Okay, we come to, that means to sum up, everyone who derive income from Malaysia will subject to Income Tax Act and have to pay tax. So the question now is, when are we going to pay tax? When are we going to submit the tax to avoid penalty? Okay, tonight we are emphasis on the Borang BE. Okay, we go to Form E first. Form E means the form that's supposed to be submitted by the employer. Each employer had to submit the Form E. Under the normal circumstances, they should be submitted before 31st March 2020. That means your EA form had to be given to all the employee before 28 February each year. I mean, under the normal circumstances, so that your staff will be able to submit to the income tax before 31st March each year. If you are filing by e-filing, they get extra 1 month. That means it's the 30th April 2020 if you file by e-filing of your Form E. But because of MCO period, there is extension of 2 months. That means the last date of filing the Form E will be 31st May, which is already past 3 weeks ago. That was the Form E submission. That means if you are not late filing or this Form E, there will be a penalty at least 200 ringgit to 20,000. So this is the Form E, or the penalty. Minimum is $200. Okay. Then we go to the Form BE. That is the employment income group. All right. So normal filing date is 30th April each year. If you file by e-filing online, there's extra 15 days. That means it's 15th of May each year. However, because of MCO, they extended another 2 months. So the last filing date for those employment income, I stress that, employment income, those Form BE, the due date of filing is end of June. This month is end of June. That's why we try to aware of this, to talk on this thing. I think this is very useful to those employment income. The last date of filing will be end of this month. And those for business income earner under the Form B group, normal day will be 30th June. If you file by e-filing, will be another 15 days. The mean is 15th of July every year, usually. But because of MCO, they extended to 31st August this year. So those business income, the sole proprietorship, partnership, or those who have some, what they call a self-employed, the last date of filing is 31st August this year. So for those companies, usually under the normal rules will be the 7 months from closing of account period. But if you file for e-filing, there is another additional month. That means 8 months from the financial year end. However, because of MCO, they extended another 3 months for those year ended September 19 to December 19. That means for those December year end case, right, the December, for give example, for the December 2019 year-end case, the last date of filing will be 30th October this year for the Form C. Right? And those for non-resident, the normal date of filing will be 30th April. Similarly, if you are filed by e-filing, will be another 15 days. But because of MCO period, so also additional 2 months. That means the last date of filing for those non-Malaysian resident, tax resident, is 30th June 2020. All right. Similar with the other, those foreigners who have business income, is normal date of filing will be 30th June. If you file by e-filing, will be 15th of July. But because of MCO, there is additional 2 months. That means is 31st August 2020 for those non-Malaysian tax residents who derive income from Malaysia. Okay, what are the consequences if you are late filing or you have no submission at all? So the offense will be, offense means under the provision of under 112 subsection 1, there's a minimum of $200 to $20,000 or imprisonment for a term not exceeding 6 months or both. So you see, all this all the time, we are not aware of there's any imprisonment or not. In fact, under section 112, if you never file your tax return or you late filing, if you are charged to the court, there's a penalty of 200 minimum to 20,000 maximum or imprisonment of the term not exceeding to 6 months or both. Okay, what happens if you late payment? Okay, you have filed already. Let's say you are this employment income. You have this PE case before end of 30th June. You already file your personal tax return, but you forget to pay, or maybe at the last day, 30th night, you last minute job. Then before 12 o'clock, you submit your tax. But when you try to pay the tax, suddenly it's too many people jamming, and it is crossed over to another day. That means you are 1 day late. It is considered late payment already. If you pay on the 1st of July, you are considered late payment. So the penalty will be, 10%. 10% if you within 60 days, and additional an additional 5% if you pay after 60 days. All right, that means the penalty will be 10% you pay within 60 days, and additional 5% you will pay after 60 days. For example, you are the employment income. You're supposed to be submitted and paid before 30th June this year. All right. Then you suddenly, because of a reason, whatever, you only pay your tax in 1st of July. That means it's additional 10% penalty on that already, on whatever the tax that you should pay. And if you didn't pay within July to August, let's say you pay in 15th of September this year, then there's another additional 5%. Altogether 15% penalty on the late payment of the tax. So apart from these late payment charges, whatever penalty, there is additional one of those things that I would like to bring to your attention. One of the consequences of not filing, that means it will affect your loan borrowing also. Usually, why we need to declare tax is not only because this is our duty to declare tax, it is also for your future funding purpose, right? Tax filing, usually establish a good reputation for individuals. It shows that how much is your income during the year. And when you apply any personal loan or any company loan, usually the bankers will look for your tax return, and obviously the bank will require 2 or 3 years of income tax return from And nowadays, they are looking for tax payment receipt also. They are not only see your tax return form, they also want you to show them 2 to 3 years of tax payment receipt. So if you want to borrow a lot of loan in futures, make sure you submitted your tax and make it properly every year and pay your this tax penalty. Okay, we go to we have a lot of things to talk about employment income, but tonight we are going to emphasize to the benefit in kind and also the director salary and also director fees. In what circumstances we need to declare director fees or director salary? These are all the personal relief. Okay, we come to what is benefit in kind. A lot of people heard about BIK. BIK, what is BIK? In fact, BIK is short form, in fact, is referred to benefit in kind. What is benefit in kind? Under the public ruling 11/2019, which is published last year, benefit in kind are defined as benefit that not convertible into money, even though they have monetary value for the company. The phrase not convertible into money means that when the benefit is provided to the employee by the company or to the directors by the company, because under the law, directors is acting as an employee of the company. That benefit cannot be sold, assigned, or exchanged for cash. For example, the best example is that some of the employee or some of the directors are using company car. That means that the directors or staff are using some benefit provided by the company because the car was belong to the company. So like salesman or some of the directors is a very common case to drive out the car back home. All right. So those benefits are provided by the company. And the second good example will be living accommodation provided by the employer. Sometimes the company will pay living accommodation provided to the employee or to the staff or to the directors. So all these benefits derived from the provided by the company are not convertible into money, isn't it? But there is benefit in kind. That means those benefits you have to declare inside your personal tax return, because this benefit in kind is subject to tax. So the next question would be how to calculate this type of benefit in kind. For example, if the company provide you a car or the director using the company car. So this is, we come to the next slide. Okay. For motor car, it will depend on the cost of motor car. When I say cost of motor car, it refers to new valuation of the car. It's referred to the price of the new car. Even though you are using the old car, but when you calculate benefit in kind, they will refer to the cost of a new car. Let's say you are enjoying one of the Mercedes. The Mercedes will cost about, let's say, 200,000. So you see the 150 to 200,000, the benefit in kind that you're supposed to be declared to your personal tax income will be 7,000. And the petrol that you enjoy, the benefit in kind, will be equivalent to $1,008. That means if you using the Mercedes car, which costs 200,000, provided by the company, you have to declare 8,800 as your benefit in kind inside your personal tax, right? Similarly, if you're enjoying, let's say you're enjoying a Rolls-Royce costs about 500,000 and above. That means each year you have to declare benefit in kind of 25,000 plus 3,000 petrol. That means every year you have to declare 28,000 as your benefit in kind into your personal income every year. Then, but if the motor car is more than 5 years old, all the above benefit in kind and petrol is half, 50%. Okay, to sum up, if you enjoy, we come back to this 200,000 Mercedes. If your Mercedes already more than 5 years and above, that means your benefit in kind to be declared will be 7,000 plus 1,000 is 8,000 and 50% discount. That means it's only declared 4,400 each year, right? Because your car already more than 5 years old. Okay, so I hope this will be make things clearer, make this thing clear, and then also then the people will say, is there any tax advantage to bring in a benefit in kind, or is there any good point to bring the car inside the company? Yes, there are some advantage and some disadvantage. The disadvantage, which I explained just now, there will be a benefit in kind accrued to the personal directors or personal staff for enjoying the benefit. But the advantage of putting the car inside the company is the company can claim capital allowance. If the car is a new car, less than 150,000, the capital allowance will be 100,000. But if the car was we refer to the new car, if the new car is above 150,000 above, let's say the cost of car is 200,000 new car, then the capital allowance allowed to be claimed by the company only 50,000. Okay, so and in the third case, if the car was old car, was second-hand car, that means it's only allow you to claim only 50,000 by the company. So there are 3 types of category. I repeat, first type of category is new car less than 150,000. Capital allowance allowed is 100,000. New car above 150,000 and above, the capital allowance allowed is only 50,000. And then third type is a second-hand car, wherever how much value is that, the capital allowance maximum can claim by the company was only 50,000. So you have to judge yourselves case by case basis. Sometimes it might be advantage for company to bring in the car to the company under the company and declare benefit in kind. Sometimes it may not be benefit for you to bring the car into the company. As you see, the more higher value the car, for example, the 500,000, each person for enjoying the car will have to declare the benefit in kind of 21,250 plus petrol 270. If this is the new car, 500,000, right? So it will be a big tax to be paid by the individual who are using the car. So each case had to be not judged by case basis. And then the second benefit, if you bring in the car to the company, was that those repair maintenance can be claimed by company. I have come to the case, there's one real case that sometimes if you put the car under the company, when you claim all those car maintenance, the income tax officer will check whether the person using the car had declared benefit in kind or not, or it can show in the EA form. If the EA form never show the benefit in kind, I can tell you in some of the cases, practical cases, the IRB may not allow the company to claim the repair and maintenance of the car because the directors never declare benefit in kind. So this is one of the practical problems that have to be aware of, have to be careful of this, right? Also, so this is the benefit in kind. We come to another second type of benefit in kind. There is a living accommodation provided by the company. There are 2 types of category. First type of category is normal employee. Second type of category is control company. When we say control company, that means the directors, usually refer to directors who control the company. So under the category number 1, if the company pay renting some living accommodation provided by the company for the employee, the benefit in kind will be the defined value of the living accommodation. That means how much you pay, or 30% of the gross income from employment under paragraph 3, whichever is lesser. That means if your company renting a house, for example, your income, let's say your employment per month income, let's say your income is 3,000. Then company rent a house for you. The company pay 1,000 ringgit each month. So how to declare benefit in kind by you? Because the company provide benefit to you. You never need to pay the renter. The company pay the renter to you. So the benefit in kind will be either 1,000 or 30% of your pay. That means your pay is 3,000, 30% of your pay is $900. So the benefit in kind will be whichever is lower of 1,000 actual the renter or $900 of your this what we call effective benefit in kind. So the answer is only 900 to be declared by you, treated as benefit in kind, submitted to your personal income tax. Then we come to category number 2. Category number 2 will be referred to control companies by the directors. When we say control companies, that means that directors who control the company at least 20% and above, that we call directors of control companies. If the company rent accommodation for this type of directors, that means the actual benefit in kind will be the renter that pay out to the landlord, paid by the company. That is the benefit in kind need to be declared by directors. All right, so I hope at this stage, most of the people, most of the you can understand what I'm trying to say. In our practical life, we found that a lot of directors never aware of this benefit in kind. So up to this stage, I hope most of them can understand what I'm trying to say. Can you give me 1, 1, 1, 1 if you understand, or you so far you find okay to me? So far, almost 9 o'clock already. Doesn't matter. We still have one big item to go through. But at this stage, can you give me 1, 1, 1 if you understand what I have been saying so far? Can you? Okay, next topic will be the difference between director salary and director fees. And when should we declare director fees and director salary? Okay, first of all, we differentiate what is director salary and director fees. Director fees is, under the law, it is contract or services with the company. That means that each month you pay a fixed amount to the director. Let's say every month 5,000, consistently 5,000, 5,000, 5,000. Even though you sometimes because of cash flow you never pay, doesn't matter, you accrue to the director's account, whether the company was owing to this 5,000 fixed amount every month, 5,000, 5,000, 5,000, and that will be defined as a director's salary. In contrast, the director fee will be not a fixed amount. Right? Maybe January you can pay him 2,000 ringgit, or maybe a couple of weeks, a couple of months later you never pay him. Maybe in September you pay him another 2,000 or maybe 3,000, not fixed amount and also not paying every month. Then in that case you can treat it as director fees. So what are the difference between, what are the tax consequences between director salary and director fees? If you treated this as a director salary, that means you need to pay EPF. Need to pay EPF. You have to deduct EPF from this director salary, and also the company need to pay 12% or 13% the employer portion of EPF. If the income was less than 5,000 and below, the employer portion will be 13%. If there is a $5,001 and above, that means the company will pay additional treated as employer portion of 12%. All right. So there is a 13% and 12% bracket. It's different. Whereas in the director fees, because there's no fixed amount there, there's no need to pay. All right. There's no need to pay EPF. Then we come to SOCSO. Similarly, SOCSO had to be paid, because the directors under this sense is a contract of services. That means you are a staff of the company. You have to pay, you are paying a fixed amount of a salary. That means SOCSO you also have to be paid. But as the director fees, there's no need to pay tax. Okay, so far so good. Okay, then there will be PCB. Okay, PCB. PCB, when you pay director salary, you have to be deduct PCB also. Yes, the answer is yes. Then director fees, it will depend. Okay, this is a bit tricky part. I have to explain, take a longer time to explain. When you come to director fees, the question is, do we need to PCB? This is the practical case that we're facing right now also. I mean, to me, I think that, okay, usually director fees is not a fixed amount. Okay, you don't know how much to pay tax because we are not a fixed amount. So usually, if you want to PCB, is optional. All right, optional in the sense that it's below 35,000, then usually you don't need to pay PCB. But if above 35,000, that means you are subject to tax already. Usually, if you pay above 35,000 and above during the year, that means you have to pay PCB. I give an example. In January, you pay 10,000 director fees. It is less than 35,000. You no need to pay PCB. In February, you pay another 20,000. Altogether 30,000 already. You still no need to pay PCB. It's still below 35,000. All right. So, but then in the third month, if you pay additional 10,000, that means altogether already how much already? 40,000. That means it's already above 35,000 as a norm. That means you are subject to tax. And in this case, you have to calculate your PCB. All right. This is one of the director fees. A bit tricky here. And then the more tricky part is that from YA 2015, there is a code deemed. Wait, I show you the dim. Okay, we come back to this. So we in this sense that from YA 2015, let's say you declare let's say last year, 2019, YA 2019, you declare a director fees of 50,000. If you pay in 2019, they were subject to PCB. What happened? You just declare and you never pay. You declare inside your company at 50,000 as director fees. It is already above 35,000. Supposed to be PCB, but the answer is no, because you haven't paid out. If you pay out, yes. But if you haven't paid out, you just accrue inside the company account as 50,000 as accruals, you no need to pay PCB because you haven't paid out. But under the law now, it is deemed to be received in 2020 this year. They mean in subsequent year. So if you accrue director fees in the 2019, even though it didn't pay out under the new law, it deemed to be received in 2020, even you haven't paid out or you pay maybe in 2021. So in this year, you're supposed to be, if you pay out, let's say you pay out in January 2020, once you pay out 50,000, then you have to be subject to PCB because you pay before what you have submitted your tax. Let's say you didn't pay your accrued director fees before you submit your tax return. Let's say before June. Okay, this year. Let's say you pay your director fees after you have submitted your income tax, whatever, then you have paid up all the tax outstanding. Then if you pay after the July or maybe August of your accrued director fees in 2019, then there is no PCB because you already declared your 50,000 inside your tax return and you already pay up all the tax already. All right, so this is a bit tricky part. I repeat. Okay, for this director fees, there is a new, effective under YA 2015, if you accrue your director fees in the first year and never pay up in the first year, it is deemed that it is paid out in the second year. So I give the example, if you accrue your income at director fees inside your company in 2019, which is, I say, majority of the company will be do that. So they calculate whatever, then they suddenly before audit was signed, they say, oh, they want to accrue some director, they want to charge some director fees. but they never pay out. They accrue inside the director fees. So they will pay out in 2020. So in that case, it is not treated as your personal income in 2019 because you haven't paid out yet. You haven't received the director fee yet. But it is deemed that you have received in subsequent year, that is in 2020. So you have to declare the 50,000 as your director fees in this year. Whether you receive in 2020 or not, you are deemed to have received. Okay? Then I hope it makes things clear. Then okay, this is a payment received is amount monthly, can receive in lump sum amount, not whatever. Okay. Tax relief. What is the advantage if you declare director salary? If you declare director salary, that means the employer portion, remember the EPF portion, they can pay up to 19%. Okay, if you pay director salary under this from the company, if this company was controlled by you or whatever, or maybe you are the directors, very important people. The company able to pay your EPF up to 19%, from 12% or 13% up to 19%, and all this the difference of 7% is to the personal director is tax free. They mean the company employer contribution 7% more, and the company can claim the expenses deductible against the company income, whereas the personal is not treated as personal income because EPF to you is not the employer portion to you is not income. Okay, so this is the tax planning side when it's the pay director salary. So bear in mind that to almost of your employee on the boss, I will say when you want to declare any director fees, so be careful. Not necessarily director fee is the advantage. It will depend case by case and also depend on your personal income tax. Like for example, the company tax rate in 2020 will be 17% when the total income was 600,000 and below, and only above 24% when the company income, the taxable income is 600,000 and above. So in this case, if you declare director fees to you, but if you tax bracket, the personal tax bracket rate is already above 17%, maybe up touch 24% or 28%, it is not advisable. I mean, as far as company and if this company is more or less belong to you or whatever, so it will be case by case basis. Not necessarily, usually you declare director fees is an advantage on the tax side. It depends on case by case basis. Bear in mind that the 600,000, YA2 is 600,000, YA2019 is 500,000. So there is a for 600,000 you have to depend is below 17% only. So if your company enjoys 17%, why are you want to declare director fees to you where you want to pay higher tax than 17%? Say for example 24%. It is not tax advantage also. All right. So these are some of the things that we discussed tonight. All right. Obviously, I have quite a lot of things to discuss in this thing, and also there are a lot of tax planning also. I at least have a 10 to 12 tax planning. So, but unfortunately, I cannot share by tonight. So we may be share maybe in future day. All right. So basically, today we sum up that we are talking about the director fees and benefit in kind and all those things, and then the tax planning side. If possible, if there's a time, then we are able to tax, to share in the future. We have a lot of tax planning under the personal income also. A lot of people say, how come my personal income, my employment is fixed already? I got tax planning. I tell you, there are still a lot of tax planning. Don't worry, there are still a lot of tax planning. All right. There are still a lot of tax planning provided you have a good planning with your employer. To the company is similarly, whether pay you in X ratio or pay you in this one, some of our benefit or whatever, or pay you in reimbursement to company, the expenses deduction is the same, but to you it's totally different. For example, your current salary is 8,000. Your employer increased your salary to $8,500 in the recent increment. You subject to employer to change the increment of $500 to your employee EPF contribution by increase from 12% to 19%. You still get your money 8,000 plus those employer portion. You still come back to 8,500. To company is still the same. They still can deductible, but to you it's totally different already because your increment of $500 already converted into the EPF. You can see these things. So this is one of the just as one of the examples of tax planning. Obviously, there are second example and third example. We have a few examples, right? So basically, I hope what I have shared here now already at least you understand what I'm trying to share, what I'm trying to convey my message. Hopefully, you can gain something. And bear in mind that tonight sharing we will keep until our Facebook until 11 o'clock or perhaps maybe midnight. Then we are going to take down. So you can share whatever just now we have mentioned about just a small. It might be highlighted. It might be some brainstorming on some ideas. All right. So in future we hope to share more on this tax planning. As I can see here, in fact, all the past few months or the last year, I have 4 types of conduct of cases. One is investment in property, how to save tax in practical way. All this is about 3 days course. And then managing company, how to save tax in practical way when in the Sanjam Berhad, and also sole proprietors and partnership. And also as employee, and we have shared tonight how to save personal tax in practical ways. So I hope I'm going to end here. Hope everyone have a good night and enjoy my talking. And hope everyone who can understand what we have shared so far and enjoy some benefit and some brainstorming. Thank you very much. And I will back to Lu Hui. Back to Lu Hui.
Hi.
Yes, back to you, Lu Hui.
Okay. Hi. Thank you, Mr. Hao. So, my friend, do you learn something or do you learn some new tips from Mr. Hao tonight? If yes, you type number 888. Mr. Hao love number 8. Thank you. So, before we end our live tonight, be reminded that the employment income without business income, please remember to submit your Form BE before 30th June 2020. And then make sure you make your payment before 30 June 2020. And then second thing is, before you declare any tax, any director fee, make sure you calculate whether you have exceed the threshold. Okay. So our life will stay for a longer period because this one, this video we will stay a longer period than the others one because this one not sensitive issue. So see you again next week from Monday to Friday, 8:30 to 9 p.m. Okay, good night.
Okay, we will share every Monday to Friday. We will share every Monday to Friday. Hopefully, we will conduct in English again, okay? For the past few weeks, we conduct in Mandarin. Sorry about that. But we try to start conducting in English. Hopefully, next week, Monday to Friday. Every Monday to Friday, we have a sharing from 8:30 to 9 o'clock, right? Hopefully, we will conduct in English again from next week, all right? So, good night.
Good night.
Good night.
Bye.
Bye.
And please help us to share to your friend and family. Bye.